What if the biggest misunderstanding about XRP right now isn't the price, but the idea of a supply shock itself? Because lately, the XRP community is split straight down the middle. On one side, you've got people saying a supply shock is guaranteed, unavoidable, and already underway because ETFs are absorbing massive amounts of XRP. On the other side, you've got people saying a supply shock for XRP is basically impossible and misunderstood. So today I want to slow everything down, cut through the noise, and talk realistically about what a supply shock actually means, whether it can happen with XRP, and why the price action we're seeing right now deserves your full attention. Because we've just moved through some levels that matter far more than most people realize. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember this is not a financial advice video. Now, before we even get into supply shock territory, I want to quickly address something slightly off to the side because it's been popping up everywhere lately. There's a new narrative floating around that claims XRP is somehow overvalued because its market cap doesn't align with its TVL. Total value locked. And honestly, I have to say it straight. This might be one of the weakest arguments I've ever seen in crypto. The entire metric falls apart the moment you apply it consistently. There's a reason Bitcoin is mysteriously missing from those comparisons. Bitcoin has essentially zero TVL, yet it commands the largest market cap in the entire space. That alone tells you this metric is being selectively used to push a narrative, not to explain reality. And this keeps happening over and over again in crypto. People latch onto one shiny number, TVL, transactions, TPS, and try to use it as a shortcut to valuation. But here's the truth. TVL without activity means nothing. You can inflate TVL overnight by parking capital that never moves. Billions locked and never used add zero real value. The same goes for transactions. You can spam a blockchain with meaningless transfers and brag about volume all day long. None of it matters if it doesn't solve real problems or attract real institutional participation. This is why the whole XRP killer narrative has never played out. It's not about launching the fastest chain or inventing a new metric. It's about trust, liquidity, regulatory history, and long-term integration with financial institutions. Those things don't appear overnight. They take years, sometimes decades to build. XRP didn't get where it is by accident, and no amount of flashy TPS numbers changes that. Now let's pivot back to the main topic, XRP and the idea of a supply shock. Right now, one thing is undeniable. XRP is leaving exchanges at a noticeable rate. Data providers like Glassnode are showing consistent outflows, and naturally that has people excited. Less supply on exchanges plus rising demand is usually bullish. Some critics argue that Glassnode doesn't track every exchange, and that's true. But if you're seeing the same behavior across a large sample of major platforms, it's not a stretch to assume the trend extends elsewhere as well. But here's the key question most people aren't asking. Why is XRP leaving exchanges? And the answer is actually pretty simple. The market dipped, long-term holders stepped in, bought XRP at discounted prices, and moved it into self-custody because they're not interested in short-term trading. They're positioning for the long game. That behavior alone doesn't mean supply shock, it means conviction. So what does a supply shock mean in the context of XRP? First, let's clear up a misconception. A supply shock does not mean XRP suddenly becomes impossible to buy. That's unrealistic. XRP will always be available somewhere. The real question is price. Will XRP always be available at today's prices? That's a completely different discussion. Here's what makes XRP unique. Price itself unlocks supply. At lower prices, very few long-term holders are willing to sell. As price rises, new supply gradually comes to market, not because more XRP is created, but because holders finally see prices that justify selling. Someone who refuses to sell today might happily sell at $200. That's not magic. That's market psychology. This is where ETFs change everything. ETFs don't just add demand, they add new lanes of demand. Institutional access, retirement accounts, passive exposure, these are demand channels that didn't exist before. And when multiple new demand streams hit a market where holders are deeply conviction-driven, supply gets consumed faster than it's replaced. That's the supply shock. Not zero XRP, not empty order books, but a rapid repricing of the asset because the available supply at lower prices disappears. Think of it like this. Imagine a dam with one small leak. Water flows out at a steady pace. Now imagine 10 more holes suddenly appear. The dam doesn't instantly collapse, but the pressure changes dramatically, and the water level adjusts much faster than before. That's exactly what happens when you introduce multiple new demand channels to a fixed supply asset. And what makes this even more interesting is the mindset of the XRP community itself. A large portion of XRP holders aren't waiting for $5 or $10. They're waiting for the full vision to play out. They're not here for a quick flip. They're here for global settlement, liquidity corridors, and institutional usage at scale. That mentality matters more than people realize, because unwilling sellers tighten supply far more effectively than any algorithm ever could. Now let's talk price, because the charts are starting to reflect all of this. On the XRP to Bitcoin ratio, we're seeing a long-term consolidation pattern that's been building since late 2024. This isn't noise, this is structure. The chart looks coiled, compressed, and ready for expansion. Whether we break immediately or chop a bit longer, the setup is undeniably bullish. And when you zoom out, it becomes clear just how much room XRP still has to move relative to Bitcoin. We've run the numbers before. If Bitcoin were to reach something like $250,000, which is not an extreme assumption over the next year or so, XRP returning to historical ratio levels would put it roughly in the $40 to $50 range. That's not fantasy, that's math based on previous market behavior. Even more important, XRP has now broken a long-standing downtrend on its USD chart. This is a technical shift that shouldn't be ignored. As long as we don't see a sharp reversal below that trend line, this looks like a genuine trend change, not just a bounce. And when you zoom out to the weekly chart and view XRP on a logarithmic scale, something becomes very clear. $40 to $50 XRP is not some absurd outlier. Historically, XRP has made moves far larger than what would be required to reach those levels. In fact, compared to past cycles, that target actually looks conservative. So when you combine tightening supply, expanding demand, long-term holder conviction, ETF inflows, and a technical breakout structure, you start to understand why the idea of a supply shock isn't wild speculation. It's basic market mechanics. XRP doesn't need to disappear for price to explode. It just needs demand to keep growing while holders stay patient. And if that continues, the only way the market balances itself is higher prices. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.